Donald Trump has proposed a major tax reform that could change how millions of Americans are taxed. His plan aims to eliminate federal taxes on overtime pay, tips, and Social Security benefits. Supporters say it could put more money in the pockets of workers, while critics argue it might have unintended consequences. This proposal has sparked intense debate among workers, business owners, and policymakers. But what does it actually mean for the American workforce, and how could it impact the economy? Currently, employees who work more than 40 hours a week earn overtime pay, but that extra income is subject to federal taxes. Trump's plan would completely eliminate those taxes, allowing workers to keep more of what they earn. This change could be especially beneficial for industries where employees frequently rely on overtime, such as healthcare, manufacturing, retail, and emergency services. It could encourage people to work longer hours, knowing that they'll take home a greater share of their earnings. Businesses that rely on overtime labor might also benefit from a more willing workforce. However, some economists warn that this policy could have complex effects. While it may increase disposable income for workers, it could also lead to labor shifts, where businesses might start to expect employees to work more overtime rather than hiring additional workers. If more people take on extra hours, it might reduce the demand for new jobs in some industries, potentially affecting employment growth. Another significant part of Trump's proposal is the elimination of federal taxes on tips. Currently, any tips over $20 per month from a single employer are considered taxable income, requiring employees to report them. Employers are then required to withhold federal income tax and payroll taxes, including Social Security and Medicare. This means that both the employee and the employer pay taxes on those tips. Trump's plan would make all tips tax-free, meaning that service industry workers, such as restaurant servers, bartenders, delivery drivers, hotel staff, and gig workers, would get to keep every dollar of their gratuities without losing a portion to taxes. This could significantly increase take-home pay for millions of workers across the country. But while this policy might seem like a win for workers, there are concerns about how businesses might respond. Some critics argue that if tips become tax-free, businesses may lower base wages, shifting more responsibility onto customers to provide fair compensation through tipping. In some states, the tipped minimum wage is already as low as $2.13 an hour, with employers relying on tips to make up the difference. If federal taxes on tips are removed, some fear that companies might take advantage of the system by reducing their contributions to workers' overall pay. This could result in even greater income instability for service industry employees, making them more dependent on the generosity of customers rather than guaranteed wages. Trump's proposal also includes the elimination of federal taxes on Social Security benefits. Currently, retirees pay taxes on their Social Security income based on their overall earnings, and in some cases, up to 85% of their benefits are subject to taxation. Under this plan, all Social Security benefits would be completely tax-free. This could provide significant financial relief for retirees, many of whom live on fixed incomes. With fewer taxes being deducted, senior citizens would have more disposable income for essential expenses like housing, healthcare, and daily living costs. Advocates argue that this policy could stimulate local economies, as retirees would have more money to spend. However, there are concerns about the long-term impact on Social Security funding. The taxes collected from Social Security benefits help sustain the program, and eliminating those taxes could potentially weaken its financial stability over time. Some experts worry that this could lead to funding shortfalls, eventually requiring adjustments such as raising the retirement age or modifying benefit structures. Currently, under U.S. tax law, the IRS considers tips as wages, meaning they are subject to income taxes and payroll taxes, including Social Security and Medicare contributions. Employers must withhold these taxes and also pay their share of payroll taxes on the total wages and reported tips of their employees. If Trump's proposal is enacted, workers in tipped professions could see an immediate boost in their earnings, as they would no longer have to set aside a portion of their tips for tax payments. However, this also raises questions about how businesses would adjust their payroll practices. Would they start offering lower hourly wages, expecting tips to compensate for the difference? Would customers tip less if they knew the full amount was going to the worker, without tax deductions? These are some of the complexities that economists and labor experts are closely analyzing. The proposal has drawn mixed reactions from different sectors. Supporters argue that eliminating taxes on overtime, tips, and Social Security benefits would provide direct financial relief to millions of Americans. They believe it would allow workers to take home a larger share of their earnings, encourage people to work longer hours, boost consumer spending, and improve the financial well-being of retirees. But opponents warn of several potential downsides. One concern is wage suppression. If tips are no longer taxed, businesses may reduce hourly wages and rely even more on customer gratuities to compensate their employees. Another concern is the loss of government revenue. Federal taxes from overtime, tips, and Social Security benefits contribute to essential services, infrastructure projects, and social programs. If these tax revenues are reduced, lawmakers would need to find alternative sources of funding, which could lead to budget deficits or cuts in public programs. Additionally, some worry about the long-term impact on Social Security funding, as fewer tax contributions could weaken the financial sustainability of the program. Reactions from industry leaders, policymakers, and labor advocates have been mixed. Ryan Hughes Swab, a restaurant owner, acknowledged the potential benefits of the plan, but also raised concerns, saying, quote, "This could benefit workers, but there's also the risk of businesses cutting wages and shifting costs to employees and customers." Meanwhile, Ted Papageorge, Secretary-Treasurer of the Culinary Union, emphasized the need for broader worker protections, stating, quote, "It's unacceptable that some workers still earn as little as $2.13 an hour. While eliminating tip taxes is great, we must also end the sub-minimum wage and tackle corporate price gouging." Congressman Stephen Horsford also weighed in, saying, quote, "This proposal must be part of a larger effort to support working families, not just a tax break for businesses." These differing perspectives highlight the complexity of the issue and the ongoing debate over its potential impact. As Trump's proposal gains attention, it is expected to be a major point of discussion in the 2025 political landscape. Supporters argue that it will empower workers and retirees by putting more money back in their pockets. Critics warn of possible unintended consequences, including wage reductions, business-driven policy shifts, and long-term funding challenges for Social Security and government programs. If implemented, the effects of these tax cuts will depend on how businesses, employees, and policymakers navigate the changes. Will it lead to higher earnings for millions of Americans? Or could it create new challenges in the job market and economy? The debate is just beginning, and its outcome could shape the financial future of American workers and retirees for years to come. For now, the conversation continues. As lawmakers and experts analyze the implications, workers, business owners, and retirees will be watching closely to see how this proposal develops and what it could mean for their financial future. Situd.